I think we are ready to start our next panel on inclusive insurance, led by Lisa Morgan. And I will let Lisa introduce the guests. Thank you.
Thank you so much, Kirina. So welcome back from lunch. I hope you're feeling invigorated by the delicious food that was ordered for us. So I'll just start off by introducing myself while other people hopefully come back into the room. So my name is Lisa Morgan, and I've been working at the ILO in social finance for just over 8.5 years. And I'm a UK qualified health actuary by profession. So I'm a fellow of the IFOA. And I left mainstream consulting to work in social finance because I wanted to make a difference with the studies that I'd done. So that is me. And I thought just before I introduce our speakers, because I will introduce them just before they speak, I wanted to also just say a little bit about inclusive insurance. Now, Apana, she asked you whether you recognized a couple of phrases. So I want to, in the same way, just ask, if I say to you inclusive insurance, can you raise your hand if that means anything to you? Do you know what that means? Okay, a few people. Good, I'm happy the ILO people are saying yes. So we have a few hands and a few little, So I think it's important in this session to understand what we are talking about when we talk about inclusive insurance. So globally around the world, we know that insurance is underused. The penetration rates in many countries, especially developing countries, are particularly low. So in the US, for example, well, the North American countries, you'll see sort of between 9 and 11% of GDP being spent on insurance. In developing countries, it's more like 2% or even much lower in some countries. So inclusive insurance is really this drive to find uncovered or underserved populations and make sure that we create insurance solutions that are appropriate for these populations. So it covers all different types of products. It's not just one particular type of product. So we're looking at covering health risks, agricultural risks, life risks. It's also, it could be in regulated or unregulated markets. We're looking at all the different types of inclusive insurance that would be looking after sort of these currently excluded populations. And as Apana was saying also just before the break, it also includes these public-private partnerships whereby we're trying to cover vast groups of people who currently don't have insurance. And just to say, the main focus of inclusive insurance is really this concept of under or unserved groups. And it includes what you might have heard of microinsurance. So can I have also a show of hands? Has anybody heard of microinsurance? Okay, again, a few people. So this is where it might be a bit confusing, but it's not really, because if you can think of it as a Venn diagram, microinsurance is part of inclusive insurance, and microinsurance is typically aimed at low-income people. So it's a type of inclusive insurance. And there are other examples of under or unserved groups. So for example, women are an underserved group across all socioeconomic bandings. And other groups are entrepreneurs, small businesses, smallholder farmers. Those are other examples. Okay, so just also a word about how we work. So the social finance team, we are split into 3 different work streams. So one looks at financial inclusion, the second looks at sustainable investing, and the third at insurance. So we look at what we call impact insurance. And Craig said at the beginning of his talk this morning that the way that we work is that we work at the frontier with innovation and research. So the project that we'll be talking about in this session falls under that research component. And what we do is we try and mine this research and the innovation work that we do at the forefront of insurance with insurers to try and get ideas of what best practice is. And we package that into guidance, we try to get it into the academic the syllabuses of academic material, so that this in turn can drive markets. So one of the other things we do at the ILO is we also have training training that we organize with insurance colleges around the world. So our mission with the impact insurance is to try and realize the potential of inclusive insurance for social and economic development. And on the slide, you will see like the three areas that we focus on are at the household level, also at promoting stronger enterprises, and then also helping achieve public policy objectives. So with that, and I'm glad we have a few more people in the room, I would like to introduce one of our two speakers. So we're very, very lucky today to have Maria Elena, who's joining us. And so, yeah, Maria Elena is very important to us because she is one of the donors of our project that we're going to be talking about today. And it's important to also hear, so from a philanthropic point of view, you know, why this type of work is really important. So let me just tell you a bit about Maria Elena. She is an associate at the Generation Foundation. This is the philanthropic arm of Generation Investment Management. And the foundation's mission is to use strategic research, grant making, and advocacy to unlock the power of capital markets to drive a more sustainable economic system. The foundation makes grants in three streams: climate, nature, and people. And Maria Elena leads the people stream. So this is kind of coming back to maybe the S and the ESG a little bit. So prior to joining the Generation Foundation, she worked with developing world markets, an impact investing firm, two microfinance institutions, ProMujer and Banco Solidario, and in emerging markets, fixed income research at Salomon Smith Barney. So Maria Elena has an MS in Foreign Service and an MA in Economics from Georgetown University and a BA in Economics from Boston College. So welcome. It's great to have you here. So Maria Elena, can you tell us more about the Generation Foundation? What is the foundation? When and why was it established?
Thank you. Thank you for that kind introduction. So the Generation Foundation is the philanthropic arm of Generation Investment Management, which is a pure play sustainable asset manager. It was established in 2004 alongside Generation Investment Management. And while Generation Investment Management was established to prove the business case for sustainable investing, the foundation was established to spread the practice beyond the four walls of Generation and to help mainstream capital allocators invest sustainably. Our vision is a sustainable world in which prosperity is broadly shared in a society that achieves a well-being for all, protects nature, and preserves a habitable climate. And this is the same vision as Generation Investment Management. We are research-driven, strategic grant-making foundation. We have a concentrated portfolio of around 20 to 30 grants a year, approximately 20 million pounds of portfolio. We believe in the power of financial system as a tool to deliver positive change for climate, nature, and people.
You're in the right place with social finance. And what is your overall strategy? What is the foundation's overall strategy for achieving this?
In the early years, the foundation's role was primarily to introduce the idea of sustainable investment to a wider audience. In 2004, the term ESG was just being born. We wrote and funded white papers and academic research, thought leadership, and also funded efforts to raise stakeholder awareness and understanding of sustainable finance. But as sustainable investment has become more mainstream, the foundation's role has changed, and we funded organizations that we see as supporting the infrastructure of sustainable finance, ones that help regulators set standards, data, drive commitments, and understanding. We want to move beyond just ESG as a way of improving a business's bottom line to really understanding what impacts businesses and investors have on people and planet. We continue to seek or allocate our capital, expertise, and networks in a way that will drive urgent transformation change for a more sustainable economic system. And our theory of change really is that the financial system has three main levers for change. One is asset allocation, one is stewardship, and one is policy engagement. And so all the work we do is to try to break the barriers so that investors and financial actors can do those things more effectively and try to motivate them with commitments and try to drive accountability.
Thank you. So just to let the rest of you know, so we are working with Generation Foundation on a project aimed at improving the viability and value of inclusive insurance. So we're looking at both improving the quantity and also the quality of inclusive insurance that is available out there. And this is important to us, but I'm curious to know, why is our project on inclusive insurance important to you?
Well, insurance companies are key to the financial system, as we all know. They provide economic stability and can drive investments into sustainable practices and discourage others. It can help, it can help vulnerable populations and it can help economies. So in trying to get the insurance industry to provide products to the most vulnerable is key because it's a very difficult industry to enter. So it's difficult for small startups to start offering insurance. So really trying to get the main players out there engaged in these topics would be hugely impactful.
And looking at the research element of our project, why is this research element important, do you think?
I mean, this project is all research. Basically, the project is trying to understand why we're at the goal of the project is to get more people insured. There's about 3.5 billion people that lack access to insurance, and giving them this access would improve their lives and help them deal with a changing climate. So this project, I mean, the research aspect, it's all research. I mean, the project has basically two phases. One is heavily research and the other one is the dissemination of the research. And the research is, one, going out and talking to insurance companies all around the world and understanding what they truly see are barriers. Why don't they enter this market? Is it because they don't see that as a profitable market? Is it because they see it as a completely different business? Is it because they see the distribution channels impossible to deal with? So the first bit is really understanding, okay, what's holding insurers back from servicing this market? With that information, we can then go and try to deal with the barriers and really think, okay, first of all, let's make a business case. There are profitable products out there. So the ILO is going out and trying to, has gathered evidence of profitable products that work and is trying to understand why they work, what is the methodology, what are the returns, and understanding that, then they can then go to insurers and say, why don't you enter this market? There is a business case. You can make money. You can service the people. And one element I've forgotten to mention is that the ILO goes even further in its research and not only identifies products, insurance products that are profitable and that align with insurers' needs, but it makes sure that those products are offering good client value. So really understanding, okay, this product, makes a lot of money, but at the end of the day, it's making vulnerable people worse off. So really trying to embed that. And without this research, you can't convince anyone to enter the market. I mean, the importance of research in this product is because recommendations based on research are more easily received. And so the idea is to gather this research, understand the problems, talk to those problems, make sure those products are scalable, that they offer client value, and then disseminate, which is the second part of the project.
Thank you. So, I mean, I hope for people in the room who maybe went into actuarial science or the mathematics of finance, maybe you didn't really appreciate the value of insurance to development, but this is really something I'm trying to highlight this project. So, Maria, Elena, your aim is also to protect climate, nature, and people. That's in the mission of the Generation Foundation. So how do you see inclusive insurance helping with this protection?
the social element is clear. Uninsured risk is a cause of persistent poverty. You know, the number of people still living in poverty is 4.5 billion people, and in extreme poverty is 533 million. So offering insurance can improve the lives of many. It's the most vulnerable groups who are often the least responsible for climate change, yet who will suffer most from it. They are the ones who have the lack of safety net and resources to protect themselves and their livelihoods from climate impacts and the impact of nature loss. So having insurance helps guard against life's many risks, including those that are intensified by increases in extreme weather, protecting people and their assets, enhancing productivity, economic growth. Insurance enables farmers to get back on their feet after a failed harvest, small business owners to carry on after a fire destroys their premises, and families to rebuild homes battered by floods. In terms of protecting nature, agricultural insurance can play an important role by promoting good farming practices that avoid topsoil erosion and give advice on crop rotation. Insurers often look to combine insurance with value-added services, and such information can also be powerful in the hands of millions of smallholder farmers. And insurers, it can also help with the adaptation to climate change by protecting people and their assets from extreme weather. And finally, insurers, I think the insurance industry can also be, they have vast assets that they're investing. So if insurance industry is also investing their assets sustainably and considering climate, nature, and people within their own investments, and then that's an even more powerful, that just adds value to inclusive insurance.
Fantastic. So thank you, Maria Elena. That was really helpful in introducing the work that we're doing together. So I wanted to just touch on the elements of this project we're working on. So the first thing we did, as Maria Elena said, is we went out and we've been speaking to insurers that are not actually looking at inclusive insurance. So most insurers will look to insure sort of middle income, high income people and businesses, and be a little bit afraid to go downstream. So what we did is we worked together with the Microinsurance Network to interview 40 insurers around the globe to understand why they were not serving, why they were not looking at inclusive insurance. And so I wanted to share with you some of the results. So we actually, with all of these interviews, we spoke to the top executives, and they came up with like around 370 reasons why they didn't want to go into this space, which is quite a number. But there was lots of overlap in these reasons. So we grouped these into 99 different barriers. And of these, we came up with 6 different themes of what the problems were. Now, you can see where this is going. We're trying to find out what the problems are and then try and solve it. So on the slide, you will see that these are the 6 themes. I didn't want to go too much into detail because I don't have time to tell you 370 reasons. But the first issue was really profitability. And I'm going to just share with you a couple of results just so you can get a taste of what we're finding. So while insurers, they did feel that actually doing inclusive insurance was profitable, it could be profitable, they just thought that the time horizon on that investment was just too long. So for some insurers, they wanted to see quicker returns. So it would be easier just to go for the conventional stuff. So that was one of the barriers. The second theme was very clear. How do you distribute? How do you communicate? I mean, we had a slide earlier of that beautiful picture of the Ghanaian woman with it on her head. So, you know, women or, you know, people who are in the informal sector in developing countries, it's quite hard to actually reach them. So you have to have distribution partners, MFIs and others, that will help you reach these populations and get them covered. But this is expensive and complicated. So some insurers are they don't have the appetite for doing this. The third, I can't read that at the back, my eyes are not good enough. Technical capacity. So the third barrier was just the know-how of how to deal with these new populations of people to cover, and how to adapt the insurance products, the insurance models, the pricing, everything that goes into it to deal with this new market. Regulations also came up as a barrier. There was, in some countries, you have microinsurance regulations. In other countries, there's nothing much, but it's often confusing for people, you know, how they need to deal with the regulations for these types of products. The fifth barrier was, again, just dealing with, you know, a population that was maybe less financially literate, who had never used insurance before. You know, how do you manage to get this? How do you get people to understand what this insurance is and that it's useful and that it can really help you? Then there were a whole host of other issues which we just bucketed under other. So you can get these slides and read more about those barriers if you want. But now the next bit of our research is that we are speaking to 10 insurers, inclusive insurers, who are leaders in this space and who are actually doing a fine job of developing and getting these inclusive insurance products out there. And so I am very happy to introduce our second speaker, Michal Matul, who, I don't know, we can't see him, but he is there. Michal, you still there?
Yes, I'm here. Hello, everyone.
All right, so you will shortly, I think, appear on our screen. So let me tell you a little bit about Michal. Michal joined AXA Emerging Customers early in 2017 after 9 years of working at the ILO's Impact Insurance Facility, which, as I'm sure you've figured out by now, amongst other things, is a thought leader in inclusive insurance. And at AXA, he leads the digital health agenda and is supporting AXA entities in emerging markets to build internal capabilities and develop new solutions for low and middle income households. Michal's work has also been focused for more than 20 years on understanding financial behaviors and improving risk management options for low income households. He's previously worked with Planet Finance in West Africa and with Microfinance Center in Eastern Europe. So Michal, welcome. Don't know if we see you. I don't know if your camera is on.
Yeah, but I don't think he's...
Good afternoon, everyone. Really happy to be here, and thanks for the invitation.
Yeah, it's our pleasure. I think you are slowly making your way onto our screen. Okay, is your camera on, Michal?
Yes, it is.
He has a bad connection. Other people are. We can see them.
Well, we can hear you, but we can't see you.
I can switch it off. Yeah, wait, just a second.
All right. Well, we'll just go with your voice then. Okay. So Michal, can you tell us a bit about AXA and AXA Emerging Consumers?
Sure. So AXA, as you probably know, is one of the largest insurance companies in the world. AXA Emerging Customers, we are basically an inclusive insurance arm of AXA. It was founded in 2016, so 8 years ago. And the mission, I mean, you discussed inclusive insurance, so the mission is really to protect the underprotected. When it started, the idea was basically, let's just start when insurers stop, and insurers stop very high in the pyramid. You know, in most of the emerging markets, you have 1 or 2% of people who are insured, and these are usually those better off. It's a business with social twist. I can unpack it a bit more, but it's not CSR. Yeah, so that's probably one of the success factors. We are now in 21 countries, 13 emerging markets, and 8 European markets. When you look at it from the, let's say, business perspective, the bet is really, I mean, it is how it started. The bet was to kind of create insurance culture and start protecting the future kind of emerging middle classes in the emerging markets. In Europe, the context is a bit different because we're talking about declining middle class. There's more and more poverty in Europe. People have insurance, they insured, but they more and more they can't afford it. Yeah, so that's why we also decided last year to move to emerging markets. To move to Europe. The context is different, as I said, but in fact, many things remain the same, especially, you know, trying to make insurance simple and affordable. We ended last year with 14 million low to middle income people covered in emerging markets, and almost 3 million people in Europe, with an ambition to grow to 26 million by 2026. It's a profitable business for AXA. In fact, most of our schemes are profitable. We run more than 200 live schemes. In terms of products and propositions, I think the key is really to try to make it as simple as possible and make it affordable to this target segment. It's basic protection, yeah. So these are kind of life, accident, some health insurance products, but also more and more products that are tailored for specific segments. Yeah, so we also include some, basic property covers. We also collaborating with AXA Climate, so our kind of parametric insurance arm that kind of develops index products to tackle climate change challenges. And I think when you look at the products, I mean, the key is really it's a low ticket, high volume business. Yeah, so low ticket meaning that these products will cost from less than $1 to $5 per person per month. It's all B2B2C, so it's all about partnerships. So we don't really kind of sell these products directly to low-income people. We always work with organizations that have trust and last mile reach with this target segment. It's really the game. I mean, we can talk a bit more about it. The game is really to kind of embed insurance, to make the first proposition mandatory and try to grow from there to provide more value to both our distribution partners and their customers. So it's, I mean, maybe last thing for the introduction about AXA, and many people in the room, we've been in this field for a long time. AXA is not the first entry to this field. Yeah, there were other kind of local and other multinational companies that started this way ahead of AXA. But I think what happened at AXA, that we really had a very strong commitment from the senior executives, and we just got the governance right. Yeah. So what's interesting is that we are a cost center, so we don't have a profit and loss account. Yeah, so these are all local balance sheet of our local entities, but our local CEOs, they will have inclusive insurance business in their target letters. We have a thriving community of more than 200 people working full time on this. Yeah, so it's growing. And what happened also last year, now inclusive insurance is part of AXA core strategy. Yeah. Imagine this is really quite a huge company, so it's quite impressive how we managed to translate these initial commitments into being kind of fully embedded in the strategy for the next years to come.
Thanks, Michal. That's really insightful. And maybe just thinking about globally, I mean, you work in many different countries, but I mean, can you tell us just what you mean by emerging customers? Perhaps give us an example, and also what would you say all of these customers have in common, if you can say that they have things in common?
Yes, and it's a very diverse group. Yeah, so it's a bit misleading when we kind of start talking to people that don't know the topic, but it is really starting from informal sector. All the micro entrepreneurs, especially in sub-Saharan Africa. It also includes the former kind of SMEs, but then there are other segments. Most of the civil servants in the emerging world and in Europe as well. So teachers, military, health workers, they basically are emerging customers as well. And then when you go to Asia, I mean, and Latin America, many people have relatively decent kind of formal job contracts, but they're still quite vulnerable. And then what's interesting also with the gig economy, so all the guys that deliver food to your houses, they are in between informal and formal. Yeah, so and I think this is also changing the landscape especially in countries, in European countries, because they very much unprotected. So what's in common? So these people basically are too rich to be poor and get the subsidized social protection from the governments, but they are too poor to buy traditional insurance offers that will start from like $100-150 per person per year. And the other thing that is in common is the protection gap. I mean, it's a no-brainer. I think we all understand that this is the case in low-income countries, when in fact the social security doesn't really work, and the social kind of government-led health programs, they don't really cover most of the population. But it's interesting to see when we're discovering this in Europe as well, that it's the same problem in Europe. At the end of the day, I mean, let's take the extreme case, Switzerland, because we also work in Switzerland, and our team in Switzerland, I mean, their tagline is inclusive insurance, even in Switzerland. But then when you look at it, when you are a poor person in Switzerland, you will get most of the services subsidized. If you are a lower middle class person, then you need to pay for your health insurance, and it will cover 80% of your medical costs. If you hospitalize for 2 weeks in Switzerland, your bill will be as much as 50,000 Swiss francs, meaning that you will need to find 10,000 to pay for the to co-pay for the medical bill. So, and imagine just who can really living maybe a decent life, but on the low income, who can really find this money quickly? It's really difficult. So there, you have this protection gap everywhere. Depending on the maturity of the country, and especially the social welfare systems, this will differ. The intensity will be different, but the issue is the same. And maybe just one more thing about the emerging customers. Many people say, especially in the emerging markets, and many insurers, they will say it, as Lisa, as you kind of explained. It's hard to reach to this segment because there's low awareness, there's mistrust, there are affordability issues. But at the end of the day, when I bring our AXA teams, local teams, to talk directly to the to emerging customers in this country, they in fact realize that they usually earn much more money every day than the AXA employees. So in a way, it's not the question. When you think about affordability, it's not the question of money. Yeah, the issue is that they really have different priorities, and they need to juggle many expenses that are related to business and household, and the idea is basically to kind of come up with a product that will be cheap enough for them to test. And when they test it and they like it and they have positive discovery with insurance, then in fact they have resources to pay more. So the market is there. It's really hard to enter the market because you need to kind of come up with the smart solutions that will help people to test it.
Thanks, Michal. So it's really about building a culture of insurance in these countries. So going back to that slide that I had with the barriers, so I briefly introduced the barriers that have come up in our research, but I'm curious to know from AXA's perspective, what are the top 3 barriers that you have experienced in your time at AXA? And then, have you found any solutions to overcome these?
I mean, all of us, we're learning every day, so it's not that we have solutions to all the problems. The barriers will be different in different countries, and also our entities, in those countries will be will have different kind of assets and different weaknesses. But I think when you look at it as a whole, more from the first challenge is more internal, and it's less about profitability per se. It's more about prioritizing this type of business by all the teams. that need to support it, because usually you have a team that kind of is a focal point that drive it, but they will need to get access to their actuaries, to their kind of sales people, marketing people, to make it work. And as any business, these guys, they work on the kind of monthly sales targets, and the main KPI is how much premium you generate and how profitable it is. But the top line is really important, and in fact, it's a low ticket, high volume business, but it takes time to build the volume. So in the beginning, it's really peanuts, and it's really very hard to get everyone to work on it, because people have their lives and they also want to get a bonus. So that's one thing. The other thing is that internally, the mindset, you just need to see the insurance world is quite traditional. These are people that are very good at running those traditional products and administer them. But it's very hard to move them to do something differently. And the last bit internally is really kind of legacy systems, and in today's digital world, it's really kind of hard to go around it. So that's internal. Externally, the external is really about building those lasting distribution partnerships. You already got it. It's a graduation model. You need to have at least 5 years to generate some value, not just for the customers, but also for your distributor and also for the insurer. And still many players that really have access to the target segment, they will kind of look at insurers as a source of revenue, and they will just kind of look at what's the premium level, but also what's the commission level. So it's really very hard for us we don't work with all the large players that could have helped us to do it, because if they ask for more than 50% commission, then we can't really do much about it. There won't be any value for the customer. So that's really important to kind of create this partnership that and agree that we have some time and some patience from both the insurer and the distribution partner to get it right. And the last one is demand, but it's less about people keep talking about affordability. I already alluded to it. It's more about that the insurance is the most intangible thing in the world. So that's tricky to build consistency, because people kind of, when you explain well, they will understand what they have, but if they don't use it, they will never renew it. So it's really hard to go around those behaviors and make sure that there is consistency.
Thanks, Michal. So I think just for the people in the room, when you're pricing out these products and you have to put an assumption on volume, it's really important to understand some of these constraints. But Michal, what about solutions? Have you found some solutions to some of these problems?
As I said, it's work in progress, but but I think for the first one, for the internal one, and this is more for really insurance companies. And there are some other successful companies that they really got the governance right. Making sure that that your local CEO, but also all the technical teams that are involved, they have the inclusive insurance key performance indicators in their target letters. So that's really key. And then basically, the fact that we are now part of the core strategy is really helps a lot, because then I think before we were using a lot of soft power and influencing, but now people see that this is a new kind of line of business, and also a new career path of them. So I think we're having much more positive feedback and response from all the local teams. On the distribution side, I mean, it's a bit an art, because I mean, you need to get the business case and the numbers right, but you need to also get all the relationships right. If the CEO of your distribution partner is not into it, just forget about it. It will never fly. So but then it's also important that when you develop the business case, you need to go beyond just kind of commission and another revenue stream for this bank or for this player. It should be about how insurance as a mechanism can help them to drive their core business as well. So that's really key. And for the third one, for the demand and the fact that insurance is so intangible, I mean, what we do more and more, and the jury is still out, is we try to bundle insurance with services, especially health services, especially digital health services, to make insurance much more tangible. Because if people can then test the proposition, because they can test the services, and it's then I think they will also trust the core insurance cover.
Thanks, Michal. So in the interest of time, I'm going to just move to my last question for you. So at the moment, we're busy looking at how to improve the viability and the value of inclusive insurance. But we're sitting here with researchers who I think would be interested to know, what other topics do you think they should be looking at?
I mean, these are important topics, and I mean, your list of challenges makes sense, especially for those insurers that start the business. Also, I think looking at how you can also manage risks, not just with insurance companies, because the problem in this space is the insurance companies. So, I mean, they will have the risk capacity, but it's really hard to move them. Yeah, so maybe there might be other kind of risk management arrangements that will also kind of help people to manage risk better and close the gap. Then the other thing is, the other two bits is really about incentives and behaviors. If you get the incentives and behaviors right on the demand side, then I think there's much kind of higher likelihood that people will kind of purchase and renew. Yes, it's less, for me, it's less about education. It's more about, is this the right moment, and why the person is buying insurance, and how this kind of fits with the existing behaviors. And also understanding what you can change as a behavior and what you can't change, and how you should work around it. For example, I mean, we have this project in Nigeria when we basically leveraging pharmacies to improve access to healthcare and also protection, because this is what people do. They go around the corner, and whenever they have a health issue, they talk to their pharmacist first. So it's really meeting people where they are and identifying these touch points and seeing how you can incentivize the system to make sure that the pharmacist also does the right thing, but also the people kind of keep returning there. And on the distribution side, I think something that, I mean, there are so many, distribution options and so many different models. And one thing that is in common is that you need to find the right incentives again. For those agents, so either insurance agents or those guys who have no idea about insurance and doing some banking services, and those guys who don't do any financial services, how you kind of create a way for them to understand that if they invest a bit in the beginning, then in fact they can get a decent living from distributing insurance as well.
Fantastic. Thank you, Michal. So I think now I'm going to actually give a chance for people to ask some questions. So does anyone have any questions, either for me, Maria Elena, or Michal online? Now is your moment. And you all look so sleepy, so I hope some of you have some questions. So anyone with questions on inclusive insurance? Online as well. I don't know if we have any. Yes, we have a question. Thank you.
very much. Lots of questions, but I will choose one. Thank you very much for all these thought-provoking comments. So I have one that relates to the incentives that Michal mentioned, but I suppose it also applies to Generation Foundation. So when we look at microinsurance and penetration, the incentives, I suppose, are important on both sides for the insurance to penetrate and wanting to move away from what is considered traditional. And then, of course, also on the demand side, so that those who would need it recognize that it is actually an advantage if they do enter and accept microinsurance. Are there reasons to think that perhaps the incentives for microinsurance might be different from the incentives for, let's say, classical insurance, where people just might fear of losing their house because of flooding or fire? Or can we think of incentives in the same way as for classical insurance and classical markets? That's my question. And then a comment about how to make microinsurance more palatable for insurance companies. So data is very important, and I think insurance companies know that very well. Could it be an idea that if one were to offer microinsurance, one would be at the source of data that might not be otherwise available about people, regions of Earth, from where actual data is lacking? So yes, you're offering this insurance at a loss, perhaps, but the real gain is in fact understanding better certain communities, certain regions, certain economies, and so on. Because I think infrastructure, legal entities, and so on are all aspects that do influence whether a product takes off or not. Thank you.
Thank you so much for your question and comment. So I'm going to briefly mention something about incentives, but then I'm going to ask Michal to maybe add on. So I think, the incentives for different populations are for sure going to be different. And what we always do with the work we do is we start with market research. So to really understand the needs and risk profiles of the people we're trying to serve. And by doing that, you will understand culturally and otherwise what the incentives are for not or for wanting insurance. So an example is that in some countries, for example, funeral insurance is already popular and it sells well, but in other countries, people don't like to talk about death because maybe it might bring it upon you. So, depending on the culture, through the market research, you find out these things, and that can help inform your product design. But Michal, maybe you would like to, from your experience, also add to what I've just said.
Yeah, just a very, very valid comment on data. I mean, it's a leap of faith. I mean, there's no data when you start. Yeah, I need to kind of understand the realities, and then you just fine tune when you start getting data about the actual claims experience. And then again, I mean, links back to what I said. If you run something for 5 years, I mean, no way. I mean, you always kind of manage to make it viable. Yeah. For all the parties, including the customer. Yeah, I don't have a very intelligent response to your question. I never really thought about it. I think the realities of low-income people versus the better-off populations are so different, and their behaviors are so different, that I think it's really incentivizing them to change these behaviors. I think for me the core is really to understand behaviors and how you can nudge people. To what extent is much different for in terms of the framework and the mechanism, much different between kind of poorer and richer households. I don't know.
Okay, we have, I think, time for one more question. Hopefully that was enough of an answer. We can talk more about having no data, because there's a whole session that I do at our academy on this, but we can chat. But yeah, one more question.
Just an observation as a child. Another people always say the insurance doesn't exist for low income household, but I would say, I must say, maybe they don't call it insurance. I'll take the example of my grandma. So they have this community, and in this community, they come together because they know together very well. And at the beginning of each year, they put a certain amount. And if I translate it in English, it's like you put and then you forget. Just forget. And when you put that amount, if you feel sick and you spend some time in the hospital, they'll pay something. They'll give you something, and if you die, they'll give you a kind of life insurance for your funerals, right? And then if you're sick, they'll give you money for hospital. Spend some days, provided you spend, I think it was about 3 days. But then they don't call it insurance. And I said to them, this is an insurance, and the 10,000 you put is the premium. But one of the problems could be maybe formalize it and to approach this community, and then to tell them that you can actually have it in a better package. And I think it's still existing, but I believe that is also trust, because among them, they trust each other, and then if an outside account, maybe they don't have the same level of trust. I don't know if you've thought of going through this.
So absolutely. I mean, when you study how people manage their finances in rural communities and developing countries, you come across things that for sure look like insurance, or savings groups, like you have Roscas, or rotating savings groups where people might put in money and then one person can use that money in the month, but then everyone has a turn. But yeah, absolutely, we want to try and help formalize these things, because there's a lot that goes into managing an insurer. And also, if you have it's a numbers game, so you want to have a vast number of people insured, so that you have this law of large numbers applying, so that actually the insurance does work. So yeah, we absolutely want to help to formalize these smaller, less formal types of insurance, because it works better. Thank you. Okay, so that's the end of our session. Thank you so much, Michal. And Maria.
Thank you very much. Thank you.
Yes. This Generation Foundation also funding academic projects. This is very relevant.
Yes, we have funded academic projects. So I think at the moment we have one with Cambridge and one with Harvard. So, and we've funded LSE. I mean, we have in the past. So one of the projects is about understanding the just transition, which is something that was talked about earlier, and Harvard is doing a study on understanding what needs to be in place within a community for it to then have an easier transition. So they look at communities that are dependent on high emitting industries, and then understand, okay, this community transitioned out and did well because of these factors, and then trying to map that out so that when the government goes in or investors go in, they understand who needs what and what needs to be in place for that to happen. That's one.
Okay.
You're welcome.
Thank you. And thank you, Maria Elena. We'll be sharing the results of our study over the next, I don't know, would we say year and a half, I think, until the end of the project. So yeah, get on our mailing list and you will find out more. But thank you so much.
Thank you.
Lisa, I need you first to buy the video.
Okay. It's Lisa on her own.
So your slides are ready. We just need. It's working.
Just wasn't.
Okay.
Okay.
Cool. Just
Okay.
can we get? Okay.
All right, so I'm back. Okay, so I hope, yes, how are you all feeling? Are you awake? Yes, you're awake? Okay, maybe just get everyone to stand up for a second and